On August 27, 2023, Sunday, I received preliminary buy signals for gold, silver, and platinum. To continue the movement, we need to monitor various aspects. We will evaluate the recent political and global developments and how to approach them. Let's delve into this in the upcoming video. Last week in our video, we mentioned that we were waiting for signals in gold and silver. Well, those signals came through. Especially at the beginning of the week, silver exhibited a strong movement, while gold initially struggled. Afterward, gold followed silver's lead. The gold-silver ratio shifted downward. We will assess this further through charts. So, what brought about these changes? The BRICS summit took place. This event solidified the transformation of the organization into a dual-pole structure, which I've been detailing since its establishment. Clear lines have been emphasized, with thicker lines indicating polarity. BRICS, consisting of Brazil, Russia, India, China, and South Africa, extended invitations to 6 more countries that had pending applications. While over 23 countries were present at the summit, 6 have now been officially invited. Notably Saudi Arabia, United Arab Emirates, Iran, Ethiopia, Egypt, and Argentina. Each of these countries has its pros and cons regarding participation in this group. While Saudi Arabia and UAE possess significant economic power, especially concerning oil, Saudi Arabia's crown prince exhibited some hesitance, implying that they want to review the details of the invitation. The complex dynamics are evident, considering their historical alignment with the United States and UK, even though their interests are also rooted in Russia and China. The economic interests of BRICS members are the driving force, with China and India being key consumers. Additionally, Russia, as a crucial player, anchors the alliance. However, the inclusion of Saudi Arabia, while economically impactful due to its oil reserves, will not be a straightforward addition. Meanwhile, other major powers, like the US and UK, have vested interests in this change. Overall, this will lead to more complexity and intrigue. Moving on, last week we also shared the news of a JP Morgan trader being sentenced to prison. This long-awaited decision has finally been made, with the trader receiving a 2-year prison sentence. However, it's important to remember that such traders have been manipulating prices for years. Notably, the gains they amassed from their manipulations were staggering. Looking at the broader context, these traders were involved in manipulating gold and precious metal prices, as we have highlighted in previous segments. This scandal reflects a broader systemic issue of manipulation, with the potential backing of certain governments or entities. They are forced to address these concerns, yet they are still facing the consequences. The discrepancy in gold and silver prices during New York trading hours versus other times is striking. The price difference, especially during the New York market's closure, demonstrates the potential for arbitrage. Such activities are highlighted in red on the graph, showing the disparities between New York trading hours and other global hours. Essentially, buying gold during the New York market's closure and selling it before New York opens presents a substantial profit opportunity. The reverse can also be seen when buying during New York's opening and selling after New York's closure. This manipulation is a long-standing issue, with discrepancies in gold-silver swaps as well. This manipulation is a systemic issue, and despite efforts to expose it, it still persists. Moving forward, let's take a look at gold's price behavior. The chart reveals how the price differences during New York trading hours can be deceptive. Gold has experienced manipulative behavior in the market, resulting in price disparities. Despite these manipulations, it's evident that gold is not truly declining. The chart showcases periods of consolidation and horizontal movement, with the worst-case scenario being a sideways trend. Gold continues to display strength despite the rising interest rates, and the moment these rates shift, gold tends to break out. These macro signals are becoming increasingly apparent, especially considering the recent developments in BRICS and the broader macroeconomic context. We need to closely monitor these indicators and their implications as we analyze our charts further. In our gold charts, I had requested a close above $1,898 and then above $1,908. Both levels were achieved, and we closed the week there. However, a very strong closure hasn't materialized yet. As long as we remain above $1,908 and potentially break above $1,929, further signals will emerge. The key signal will come from a weekly close above $1,948, although unless we breach the downside of $1,884 seen last week, the continuation of the signal is likely. There's a possibility of a dip forming in the medium term, but for short-term traders, a stop below $19.08 can be used to track the market, considering long positions above and short positions below that level. As for long-term players, the large cup and handle formation seen in the monthly chart, despite resembling three peaks, signifies the continuation of the pattern. A weekly close above $19.48 will be a critical signal. Our medium-term targets are $2,535, $2,750, and $3,600. Silver provided a leading signal, completing a strong week and generating all buying signals. The resistance remains at $24.80, but it's prudent to keep track, particularly as long as it remains above $23.60, which could indicate the start of an upward movement. The close below $23.60 might delay progress and initiate a search for new formations, but for now, both daily and weekly charts show no issues. Should we surpass the $24.80 mark in the short term, acceleration is expected. We will closely follow this in the upcoming week. You're aware of our ambitious targets for medium-term silver. If the $25.70 level is surpassed, a video will promptly explain the potentially larger movement. Gold-silver ratio has shifted its stance. As you remember, it was one of our pivot points, with the continuation of signals below 81. A signal has been produced, and we closed below the medium-term trend line. If we manage to stay below 81 and even fall to 78 without returning to above 81, it will confirm that the significant movement in gold-silver ratio has commenced. We'll monitor this closely. While we closed the week below 81 at 79, there are no issues above 81. However, if formations start forming below 78 and movements intensify, it signals the beginning of a comprehensive precious metals trend. Platinum is back on the agenda. As you know, we are in a short-term signal around $921. Looking at the monthly chart, we can see that if we continue to close above $921, the movement will persist. There's no issue as long as we remain above $921. However, the continuation of the signal from the gold-silver ratio may impact this. As for wheat, there's not much happening. Upward movements face resistance. There's a short-term trend level around $606, and it dipped to $595 with formations at $584. While we continue to hold a portion in the medium-term portfolio, setting short-term stops for each buying signal, I'm considering entering contracts once a stronger movement is sensed. For now, I'm maintaining positions in the medium-term portfolio until the base is clearer and the movement strengthens. If the product gains more strength, I'll consider adding positions. I'll provide more information again. Despite some macro scenarios discussed, some factors aren't reflected in the price, especially some burning wheat and ships, but we'll see and follow. For Brent crude, a rising movement is being discussed, but there's pressure. As you know, the trading market continues, but as long as it remains above $82.54, above the 200-day average, the direction is upward. Below the trend level of $85, short-term downward movements are still within this range, and caution should be exercised. However, if we surpass $85, we'll have given two buy signals below $82.54. In reality, both scenarios provide signals to track Brent crude. There's a higher probability of an upward movement tomorrow when we analyze it technically. As for natural gas, there's a formation of a base. It seems to be slightly breaking up towards $2.46 but quickly retreats from that level. Therefore, let's monitor the trend around $2.57. If it stays above $2.57, it sets a lower level and seems favorable for short to medium-term positions. However, a dip to $2.46 might complicate things slightly. We'll observe if it moves towards the $3 level. While a solid upward formation exists, a bearish scenario is being discussed. There's been talk of strikes in Australia, and there are 2 to 3 scenarios. I think these have already been priced in. The price came from $10 to this level. Even though $10 was very expensive, we discussed it, opened short positions at $7, and now at around $2.50, I believe natural gas has absorbed all the negative news. It could move lower a bit, but it won't be sustained in the long run. In this context, this is a good dip for the trading market. For medium-term players, buying during retracements and selling a bit higher to trade can continue. However, there's one product that I really like from a graphical standpoint. Formations have become quite clear. I've been emphasizing this for some weeks. Uranium. We're analyzing it, and it's within a fantastic triangle formation. The weekly chart shows this triangle, and it's forming in the daily chart as well. In light of this major breakout, I observe that we have now moved above the $37 level. As long as we stay above $36.69, it has technically provided a buy signal. If it closes below $36.69, it might exit the game in the short term, but we will continue monitoring it. Since we broke out of the triangle, there's a high likelihood of acceleration. If it accelerates, it could rise to $60, $70, or even $77, leading to significant gains in the portfolio. Regarding market movements and particularly leading signals in gold and silver, we've evaluated the potential calm week ahead. Please closely follow the signals. Various signals can be generated in the short, medium, and long term. We already have a sense of the macro scenario, but there can be fluctuations in the short term, especially if breakouts intensify. For now, we'll closely monitor it. Wishing you all careful and lucrative days ahead.